more uncertainty, but it's okay because we still make money. Still make money, baby. Look, you're not going to beat them. Yeah. You're not going to beat the institutions. You're not going to beat the market makers. You're not going to beat the whales, the large investors. You can't beat them. Unfortunately, they have an unfair advantage. They have resources that the average retail trader, who this channel is catered and geared for, we're never going to have the resources to compete with them. So what I try to teach here is to just follow their movement, is especially for your day in swing trading. Stop trying to get ahead. Stop trying to guess the bottom. Stop trying to catch falling knives. Guess the top, this and that. You can't play their game. You don't have the tools and the resources that they have, and you never will. You know, their algorithms, how they have their hands just ingrained in the media. You know, the advantage of knowing when news comes out way before you do or we do. All that, man. So it's their game. They're in control. So you can't beat it. All you can do is just go along with it. Simple as that, man. Just play along with it. And we've been playing along with it very nicely. Yesterday made some good money to the downside. Tesla puts. That was a roller coaster. Warned some of my people, members in the Discord, to sell that spike and get on out. And that turned out to be the right thing to do because it came back, gave up all its gains from yesterday, and is trading down, currently down 3.2%. We did make some money on Tesla puts today. Did add some new swings. Go and check that out. Procter & Gamble, United States Steel. These are more commodities focused, consumer staples plays, that a little more defensive plays, whether the market goes up or down. These ones do perform better in bear markets. So even if the market is up and has another bounce, we can still make money, but just gives us a little bit of protection on red days like this. S&P currently down 1.54% and counting. But yeah, the day trades we're in doing really good, except for United States Steel. That one is a bit of a laggard right now. In phase, retesting yesterday's high. So we're looking good, man. We're looking good. Hit the like, hit the subscribe, hit the link, get to the Discord. Matter of fact, check out what a Discord member had to say about our program, my program, the mentoring program in my Discord today. That's it, man. Just giving it to people real raw, giving the truth, and just doing my best to teach the average retail trader the truth about the stock market and how they ought to behave, how they ought to trade, how they ought to treat their account, how they ought to allocate their capital, move in and out of positions swiftly, wisely, with proper position sizes. You know, that's it. And just mastering yourself, mastering this right here, mastering your mind, mastering you, being disciplined. That's the only way you're going to consistently win. I mean, take it from somebody who's trading now and has been trading for some years. Got to stop blaming them. Got to stop blaming him. Got to stop blaming Warren Buffett. Got to stop blaming Jerome Powell. Got to stop blaming Donald Trump. Because the only one to blame for your consistently losing trading is you, my friend. So get to the Discord, man. What's been going on? We're making money. Back to the charts, baby. We're back. Had to make a few changes. I know everyone is scared. I know everyone is tripping. But look it. This is how we're playing it. right now in the Discord. This is what I'm seeing. I'm liking this flight to safety. Progressive, as I already showed you guys, consumer staples, insurance. Those are the two sectors I really, really like if this sell off continues. Um, Looking at the progressive chart right here, as you can see, we made these. This is the 2 hour time frame, meaning each one of these candles represents 2 hours of trading. 278 staunch resistance twice here on Thursday, March 20th, retested again on the 21st the next day, and then almost retested again Wednesday in the pre-market. And that has been a pretty strong level of resistance. As you can see, Friday we closed above that. Pre-market slightly down, but still not falling below that previously 3 times tested level of resistance. I'm also liking this big red fair value gap right here. We've got that printed on Wednesday, March 19th. The top of that candle body is right at 282.74. And we closed, progressive closed at 278.86 after Friday's session. So I would expect this fair value gap to fill, absolutely fill. Um, and as long as we stay on top of this 100 SMA that I have outlined here in yellow, now at 278.11, we closed above that strong at 278.86. So I really, on strong volume, add that note, on strong volume. So I do like that level. Let's go ahead and take a look at volume there. My computer is moving a little slow, guys. Sorry. Very, very strong volume, as you can see there. 4.35 million shares traded on the day, with an average of 3 1/3 exactly, 3.33 million shares. Um, so well over 30% higher relative volume for progressive. Procter and Gamble, our other pick, also coming and retesting the 100 SMA. Um, Not necessarily getting rejected there, but as I wanted to actually come and zoom out and look at the daily chart right here, which is what was most interesting to me on progressive. Oscillators curling back to the bullish side, RSI is right at the mean, 48, meaning no one party is necessarily in control, but the bulls have definitely asserted support here at 162, 163, making a triple bottom. Very, very sharp reaction at this level 3 times. Now sitting back at the 100 SMA on the daily chart, the daily time frame for Procter and Gamble. Very, very interesting regular trading hours gap right here, um, with wicks. It's funny, you have a bottom wick at this red candle at 173, from 171 to 173, and then a nice top wick from 170, 169 to 171, meaning it was a fight. Whenever you have wicks, that's a rejection of price. So here we had a rejection back to the upside, and here we had a rejection back to the downside the following day. So this, if we can get back up inside this range, I would expect there to definitely be a fight, but that was going to be an excellent profit target for our trade on progressive. 171, 172. We can even be more modest and just say 170.50 is a pretty good range that'll give us a very nice return on those call options that we have on Procter and Gamble. Um, we hit 170 easily, 80, 100% return. We go up to 172, we might be looking at closer to 200%. So that's what I like, guys. Looking at the overall markets, um, looking at the SPY, I know I was watching a certain level, a certain moving average, um, to either hold or act as resistance. And we definitely got the rejection um, that I was thinking would eventually ominously come. As you can see, I had a bear flag set up right there on the SPY. I had that bear flag set up probably on the 2 or the 4 hour chart, but still kind of somewhat in play on the daily chart. You can still kind of see what's going on. As soon as we printed this red candle at 30 EMA, this red line represents the 30 exponential moving average. That is the average price of the last 30 days on this daily chart. Every 30 days, not 30 hours. You always want to make sure you're in understanding the difference in time frames with your moving averages. You change the time frame, the moving average time frame also changes. So that was a very, very clear and concise rejection at the 30 EMA. Gap down Friday and just continued to sell off like crazy. We made money to the downside, made some good money on puts Thursday and Friday. So certainly the market is definitely going RSI. Bearish divergence again, dipping below 39.8 at closing around 38.1 on Friday after the session. So I would certainly watch out for a retest of the recent low prior to last week around 548. So expect that level to definitely get retested to see if the bulls want to reassert themselves and pick back up where they left off there and restart the rally, or see if we can get some sort of a relief rally, or if the bears continue to maintain control. So watch those levels, guys. That's what I'm gonna be watching. We're not doing nothing crazy, nothing too crazy on the swing trade side. Playing it real safe, as you can see. Progressive, Procter and Gamble, my two picks. That's what I'm seeing in the technicals and the overall market. So before you get too bullish and get too long, watch out for these levels. Watch for them to hold. And yeah, man, you guys already know. Hit that like, hit that subscribe, get to the Discord. This is what I'm doing in the Discord, teaching technicals, teaching people how to navigate these markets. And we're doing our thing. Peace.